Okay, recording this video after close trade Monday, 13th of January 2014. I hope you had a great day's trading today. A big trending down day, down 22 points, 1.6 million contracts traded. Lots of opportunities kind of going short and some good trading today. Got some great emails. This one from Rob Z made 27 points on the S&P Mini. Thanks. Still have a lot to learn though. Well done, Rob. This one's a question from Carl. I'm just going to revisit that kind of shortly. And if my voice is sounding a little bit raspy, apologies for that. I had my one shot, one kill first thing this morning. Took a while, took almost an hour to get that kind of trade out, but as soon as that was done, I was away up the slopes. We had a foot of new powder overnight, and Monday the slopes are empty, so went and took advantage of that, but it was howling a gale and kind of lost my voice a little bit, so and missed the opportunities, got short, but you know what the hell, I had a great day up the mountain, so you know, swings and roundabouts. Let's just revisit some of these charts. The first one I'm going to go through is just to say, you know, sometimes I'm a little bit of a broken record, but these patterns repeat again and again and again. This is this kind of cycle, pullback to end of trend kind of moves, cycling through the different time frames, from the lowest time frames to the highest time frames. And this is, you know, classic kind of head and shoulder type pattern stuff. The 45-minute chart, the lowest time frame we're looking at here, there's a nice pullback to end of trend that happens right around here on this kind of spike. That's your left shoulder. Then in the next time frame, you're looking for a completion move, a pullback to end of trend, and that's what we got today. Perfect little move, signaled the top of this, and then we had this huge decline into the end of the day. And then all of that is, so that's signaling, that's the left shoulder, that's the head, and then you know, this move is all over because we're sitting within a pullback to end of trend sequence on the daily time frame. So this thing has kind of taken its while, you know, kind of rolling over, but there we go, we finally get these patterns kind of rippling through the different time frames. So it's a beauty kind of going on today. The other thing to say, I was revisiting the better X trend over the last couple of days, just saying that we were sitting underneath this ledge. Sometimes I call this kind of up under the lip. So we'd had this Christmas rally, and psychologically everything changes after Christmas in the new year. You know, it's like you couldn't take a short trade going into the new year, into the Christmas kind of rally, but after that, you know, the money's kind of moving around. Psychologically things have changed, and that just shows with today's activity today. So that's kind of confirmation that the better X trend is rolling over. You can see this on the Dow chart, on the S&P 500 chart. This is the futures Emini daily only data, and this is the NASDAQ, and you see all of those. This is this first really kind of strong down exhaustion selling bar, kind of getting this move going. We broke the trailing stop, so this is a volume based exhaustion, volume based trailing stop. We broke that on the way down. We've come back up to test underneath that lip, and now with today's activity, that's kind of confirmation that that, you know, resistance level there is extremely important. We've just kind of moved away from it very, very strongly. So that's kind of good news. Now, to go back to these charts where it's saying, you know, the macro picture, you have to look at where the funds are flowing. And first of all, bonds into equities. And I said the bond market, it's been extremely strong over the last 3 or 4 days. Look for profit taking in the equities market. And here we go. This is the equities versus the bonds. I've been showing this for the last 2 or 3 videos, just showing this, the weakness in this oscillator. And today we're breaking through the zero line because the bonds are rallying and now equities are selling off. And you can see this is the bond contract ever since FOMC. You know, we've had blue professional bars kind of buying this kind of breakout. It's an important level down here with amateur down bars. And again, I'm going to reiterate, this is not saying that the bear market in bonds is over. All I'm saying is we've found an area of support from which we're going to rally into an area where the professionals are going to sell back down again. So, but at the moment the bonds are strong. The other one is the carry trade with the yen. Again, talking about this over the last 2 or 3 videos, saying the yen is starting to weaken, and if you get the yen is starting to strengthen, and if you get the yen strengthening, then that means the carry trade becomes less profitable, and so that'll force kind of people to take profits on their equity trades or bond trades at overseas markets. And so we've had this move back down to the zero line. It's at +2 on the oscillator here, and here's what Japanese yen has done over the last 2 days. Strong move on Friday, followed up on Monday. Again, I'm not saying this is a change in trend to the yen. We've had this huge kind of sell-off. All I'm saying is there's a point at which we reach an extreme, we get short covering rallies, we get moves back from those extremes, the trend temporarily starts to reverse until we find an area where the professionals will come back in and sell it down. So those two things kind of going on mean that there'll be weakness in equities, and that was kind of forecast last week, talking about those, just saying those trends were starting to happen and it would impact the equities market, and bang, we got that today. So 40,500 tip bar chart, this has just been a complex correction on the way up. You know, we had all of this exhaustion patterns and bearish divergence into the end of year kind of rally, Christmas rally kind of move up here. Ever since, we've been making pullback to dirty end of trend. Remember, that's not printed as an end of trend there. That's what I call a dirty end of trend, because the pullback level was violated here. If that had just been clean and we bounced straight off that, that would have printed end. And all we've done there is gone through a few little cycles after a trending move, and this exhaustion selling is getting the move going on the downside. So a big kind of start to this move. So that support level that's come in on the 40,500 tip bar chart, I'm expecting that to be crossed. We break into a downtrend on the 40,500 tip bar chart. Now, day trading. Let's first of all talk about this email from Carl. Really wanted to short today at 9:30 Chicago time. Carl, that was the right instinct, with a bunch of blue bars popping up after the morning rally. Well, there was more than a bunch. There was a lot of blue bars popping up, showing the professionals taking profits, getting short at those highs. My thinking was the pros pushed it up to fill the gap, cover their longs, and will go short from Friday's close. Exactly right. It looked like a great opportunity, but the sine wave on 1500 and 4500 held me off. What do you do when the market overshoots the cycle? Do you still think of the market as being in a weak mode or period stemming from the cycle high, or more as a time to buy on a pullback, expecting it to rally until the pullback and end of trend sequence? Carl. Great question, Carl. Let me try and explain my thinking on this. So the first chart to look at is the 1500 tip bar chart. So Friday we had a little bit of a sell-off, and then we found a bottom. We kind of rallied from there. We had an exhaustion pattern here. This is kind of short covering rally. This is Friday's activity, and then we ended the move with another exhaustion pattern here. So this is kind of getting the move going, and this is finally kind of finishing off. Now, one of the rules of thumbs that I talk about is after we've had a rally like this on the 1500 tip bar chart, the professionals take the opportunity. Once the market's kind of been moved up like that, you know, the next day the amateurs, the people that are looking at their charts overnight, will think, "Ooh, look, the market's going up. I'll get in the morning, first thing, take my favorite equity trades, the things that I think are looking strong, and I'll kind of buy into that." The professionals know that those amateur orders are sitting there at the open, kind of ready to go, and so what they do is they use that buying opportunity to get the best opportunity to kind of get short. In this case, we had a little bit of weakness. This is the overnight session starting Sunday afternoon, evening, into the Monday, so it's a little bit weak because of Europe. And then, but sometimes you don't get that. You just get a straight continuation move the next day. But they're going to use that buying that's kind of pent up, by amateurs in the morning, in order to get kind of better entries kind of going forward. So we had some buying in the morning because that was the amateurs kind of entering, and then there's all those blue professional bars, whole cluster of them, and that's the exhaustion pattern. I say, if we've got an exhaustion pattern during the end of the previous day, look for that, another exhaustion pattern during the full liquidity of the day, for the professionals to kind of reverse the market and kind of go on. It doesn't happen all the time. I say 3 out of 4 times that kind of works, but that's the pattern I'm looking for. We had the blow off, or the kind of the strong kind of move, trend move at the end of Friday, and they used that opportunity to kind of get short into another exhaustion move first thing in the morning. Now, on the 4500 tip bar chart, you can see a whole cluster of blue professional bars kind of coming in there. And this is what Carl is talking about. He's saying, look, we overshot that 4500 level there. On the 1500, we overshot this one, and this whole cluster of blue professional bars kind of come in. That for me is extremely significant. We've got our exhaustion pattern, we've got our first bearish divergence, and all those blue professional bars. It would be great if this had run pullback to end of trend and been in a really exhaustion type move. But if you were sitting through this, what you'll have noticed was this was slow work. I took out my first trade, the only trade, my one shot, one kill, 4 points here. It took almost an hour to get this thing done. It was extremely slow going through there, and this thing was not going to pop. It was not like going into some kind of exponential move where you kind of rallied really quickly above resistance, then put in our pullback to end of trend and exhaustion and so on. It felt really labored. It felt really hard work, but you knew what what was going on there was that was all professional bars kind of going on there. They were selling down, selling down, selling down, couldn't get any higher than kind of that previous level close on Friday, and that was it. That was the end of the move. I'd love to say that every time we get a really neat little pullback to end of trend with an exhaustion pattern on a left shoulder and a bearish divergence and whatever, but it doesn't happen all of the time. But if you're watching this, and Carl's instincts were exactly right, he was saying the blue bars popping up the morning rally, thinking the pros pushing it up to fill the gap, cover their longs and go short. That's exactly what was going on. So your instinct were absolutely right. Sometimes the signals aren't just picture perfect, but here's what happened after that. So first of all, we get exhaustion selling going. As soon as this exhaustion buying has topped us out, you can see the strength of the selling with an exhaustion selling move here, and then we get a really weak little rally up. As soon as that cyclical resistance does not get broken to the upside, this one got broken to the upside, so that's showing some strength, and maybe we'll put an end of trend. No, as soon as this one kind of comes in and we don't break to the upside, that shows that that's the first sign on the 1500 tip bar chart that that market is weak. And then as soon as we break through support here, bang, we're into a downtrend. And the first leg of this downtrend ended just about 1 o'clock with a pullback to end of trend sequence, and then all hope was lost. People said, no, this thing's kind of going down. At the end of the day, we got another pullback to end of trend. We don't get reversals straight away from pullback to end of trend. All that is saying is we've reached the end of this trending move. We're going to go through a little consolidation period, which we did, and then we broke into another trending move. We'll pull back to end of trend, from which we'll probably have a little bit of a bounce. On the 4500 tip bar chart, you can see again all of those blue professional bars kind of coming in, the market kind of selling off. We don't have an exhaustion pattern here. This is showing the strength of the selling going into that move. As soon as we crash through support here, we're in a downtrend. We've got to make pullback to end of trend on the 4500 tip bar chart. On the 500, you can see how this market was kind of going. This is the beginning of the day, and you can see we had a little Rambo to Rambo channel here that we finally broke out of, and that's when we got our exhaustion patterns on the 500 tip bar chart. This one didn't go pullback to end of trend because you can see the support level went below the resistance level here, so that wasn't very strong at all. So that was just showing that this was really weak. And then as soon as we broke through support here, you can see we came back really weak, amateur up bars, Rambo patterns into that pullback level, and then as soon as we start breaking through, we've broken through one support level here and we know we're in a downtrend. We start breaking through another one here at 33, we're in a downtrend. It's just a whole series of breaking these downtrends on the way down on the 500 tip bar chart. But you could feel that this market was really labored, kind of going back up into the 37s with all these blue professional bars. Whoops, just overshot a little bit there. You can see this whole cluster of blue professional bars on the way up here and then on the way up here, just taking the profits. And then as soon as we have this move, a weak move, a Rambo test back up to resistance, we know we're in a strong downtrend, and it kind of just got played out on the 1500 tip bar chart and the 4500 tip bar chart. So Carl, it's a good question. Your instincts were absolutely dead on the money. It's a pity that it wasn't a really neat little pullback to end of trend, but it was because the professionals here were just selling down into this kind of double top test of those new highs, and they were just pushing it down anytime it tried to advance up, and that's why we got all of those blue professional bars kind of coming in there. It's the nature of trading. If it were picture perfect every single time, it'd be too easy. As soon as you start breaking these support levels on the lower time frames first and then on the higher time frames, you're moving into a change in trend. So it would have been nice to have a pullback to end of trend, but in this particular example it didn't kind of work out that way. Anyway, so there we go. I've got this video out late, so it's probably, if you receive it by email, you're not going to be getting it on Monday night. It's going to be on Tuesday. Apologies for that, but I had a big day today. So hope you traded it well, and looking forward to the next few days trading.